Good day, traders. It's Tuesday, September 19th. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis through this video, and first of all, let's review the major market movement of Monday. So the first instrument we're referring here is the dollar index in 4-hourly chart. So the dollar index, which measures the greenback strength against a trade-weight basket of 6 major currencies, was rose 0.26% to 91.89 on Monday, following the strong gains in US Treasury yields amid rising expectations that the Federal Reserve will reaffirm its plans to hike rates at least once this year when it concludes its two-day policy meeting, which gets underway on Tuesdays. So in what was a slow day on the economic calendar for top-tier data, investors turned attention to the two-day Federal Reserve Open Market Committee meeting, the FOMC meeting, for fresh insight into the central bank's thinking on the monetary policies. So the US Treasury yields were jumped on Monday, underpinning a move higher in the greenback, as the investors expect the central bank to announce that it will begin unwinding its 4.5 trillion bond portfolio and reaffirm its outlook that an additional rate hike this year remains appropriate. As well as plans for balance sheet unwinding, the Federal Reserve summary of economic projections and dot plots are expected to garner much of the attention, as investors are keen to assess whether the slowing pace of inflation has altered the central bank's long-term view on interest rates. So according to the analyst at Morgan Stanley said in a note, away from the balance sheets, investors should focus on the summary of economic projections and the well-known dot plot. So they see the biggest risks to our economies call for status quo as a lower medium longer run dot, so possibly falling to 2.75% from 3%. Meanwhile, the rise in the dollar weighed on the sterling, which turned negative following a surge to 15-month highs on Monday. So with the pair GBP USD fell to 1.3488, down 0.78%, despite the Bank of England Governor Mark Carney reiterating that an interest rate hike is on the agenda in the coming months. As for the commodities, the gold price fell on Monday, down $13.67 or 1.03%. We traded around $1,311.51 a troy ounce, as the fading tensions on the Korean peninsula suppressed the safe haven demand, while a sharp uptick in the dollar was curbed the sentiment on the precious metal ahead of the Federal Reserve 2 days meeting slated for Tuesdays. So fresh on the heels of a 2-week losing streak, gold prices started the week on the back foot as investors appear to unwind some of their long positions in the precious metals following the strong gains in both the greenback and treasury yields. So gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollar makes gold more expensive for holders of foreign currencies, while in the rise in US REITs leave the opportunity cost of holding non-yielding assets such as buildings. So meanwhile, geopolitical uncertainty was eased, reducing the demand for the safe haven gold as investors downplay US North Korea tensions and peel into risky assets such as equities. Looking into oil price, it was settled higher on Monday, rose 2 cents to settle at $49.91 a barrel as investors shrugged off the expectations that US crude stockpiles are set to show a build for the third week in a row, following the aftermath of Hurricanes Harvey and Irma. So despite the US refineries reporting a much better recovery from the recent hurricanes, investors was braced for an uptick in the crude supplies as the US ramps up imports at reopened ports to make up that for the shortfall in domestic productions following the aftermath of Storm Harvey. So the expected uptick in crude supplies comes amid a turn in sentiments on the oil prices in the wake of bullish reports from both organizations of the petroleum exporting countries, the OPEC and also the International Energy Agency last week. So OPEC is expected to continue talks to extend its production cut agreement beyond March 2018 in an effort to tackle rising output from Nigeria and Libya. So both countries are exempt from production cuts. In May, OPEC and non-OPEC members agreed to extend production cuts of 1.8 million barrels per day for a period of 9 months until March 2018. So now let's review the highlighted economic data that released on the Monday, yesterday, as well as the focus data for today. So yesterday, the European Union was released its consumer price index, which refer as the inflations of August, right? And it was remained the same at 1.5% growth, right? Beside of the euro, United Kingdom was conduct the event, which is from the Bank of England Governor Mark Carney deliver a speech to the markets. Alright. So as for today, during the morning sessions, Reserve Bank of Australia was released its meeting minutes and didn't bring any surprise to the markets. So during the European trading hours, Germany is going to release the ZEW economic sentiment for September, and it is expected to be better from previous 10 to 12.5. So later tonight, United States is going to release the building permits for August, and it is expected to be slightly weaker from previous 1.223 million to 1.22 million. Its technical analysis sessions and first instruments were referring to the Great British Pounds against the US dollar pair in 4-hourly charts. So the sterling retreated from recent highs and pressured by a sharp rise in dollar despite the Bank of England governor reiterating that an interest rate is on the agenda in the coming months. So the pair GBP USD was hovering between 1.361 and 1.342, follow a retracement from recent high of 1.362. But however, it is still considered in an uptrend structure as the both moving average line in daily chart is continuing to expanding upwards, and additional with the bullish signal shown in the MACD indicator. So by a closure that's above the resistance level at 1.362 will be a signal for continuation of uptrends. Then we can refer to the next resistance level at 1.377. So on the downside, with a daily closure below the support level of 1.341, suggesting to experience a retracement and probably to fall further towards the next support level at 1.33. The single currency remains supported by hawkish comment from European Union Bank lately to slate their tightened policies, and the movement of pair EUR-USD was limited by a surge in dollars on Monday due to both currencies were strong. Thus, the pair remained ranging between 1.192 and 1.197. So with a closure out of the range will be a signal to move further towards the directions of the side breakouts in short terms. And with a daily closure above 1.21, we are suggesting for continuation of uptrend and to move further higher towards the next resistance level at 1.22. So on the downside, the nearest support levels comes in at 1.192, and Germany is due to release its ZEW economic sentiment report on Tuesday 5 o'clock of Malaysia time, and the report is anticipating to call for the tune if the single currency could continue its bull. Kiwi remained traded flat as the Westpac consumer sentiment report on Tuesday morning didn't bring any surprises to the markets, so the pair NZD USD was held steady between 0.723 and 0.73, but it is still considered in downtrend structures, so with a closure that's out of the range was suggesting for further movements towards the directions of the side breakout in short terms. So with a daily closure below the previous low or the support level of 0.713 will be a signal for continuation of downtrends and probably to drop further towards the next support level at 0.708. So on the upside, closure that's higher than 0.735 we're suggesting for shifting trend directions become uptrends, and we could refer to the next resistance level at 0.739. For the OZ, it was remain its keen trade as the Reserve Bank of Australia repeated that monetary policy is expected steady for some time in the minutes of its September rate review released Tuesday. So and it held steady at a record low 1.5%. So the pair Australian dollars against the US dollars was traded slightly lower after the release of RBA meeting minutes and towering below the both moving average line in 4-hourly charts. So however, the pair held in an uptrend structures, thus with a closure that's above the previous high or the resistance level of 0.813 will be a signal for continuation of uptrends. So on the downside, the nearest support level comes in at 0.794, and closure below this level may lead to experience a short retracements, and we could refer to the next support level at 0.782. The safe haven Japanese yen is remain weak as fading tensions on the Korean peninsula suppressed the safe haven demand, and the pair USD JPY was continuing its upside with an uptick in dollars. So currently it is traded near to the resistance level of 111.6. So the bull is expected to continue with a closure higher than 111.7, and on the downside, the nearest support levels could refer to 110.7, but it is still a tad away from current price. So the United States is due to release the building permits data on Tuesday, 8:30 Malaysia time, which anticipated to bring higher volatility to the dollars. Gold price was felt lower on Monday as the fading tension on the Korean peninsula suppressed the safe haven demand, while a sharp uptick in dollar curbed the sentiment on the precious metal ahead of the Federal's two-day meeting slate for Tuesday. So it was felt through the Fibonacci retracement level of 23.6 or $1,321 a troy ounce of levels. So additional with the formation of dive cross formed by the both moving average line in 4-hourly charts, gold price is suggested to experience a short retracement and fall further towards the next support level at $1,300 a troy ounce. So on the upside, the door for bull only can be seen with a daily closure higher than the previous high at $1,358, and the housing data from the United States due later tonight will be another indication for its further directions. For the oil price, it was settled higher on Mondays as the investors shrugged off the expectation that the US crude stockpiles are set to show a build for the third week in a row following the aftermath of Hurricane Harvey and Irma. So currently, the West Texas Intermediate crude price is traded near the highest level of recent trading range, or a tad below the resistance level of $50.50 a barrel. So closure above $50.50 a barrel will open up a door for stronger bull and will be pushed higher towards the next resistance level at $51.50 a barrel. So oil trader will eye fresh weekly information on US stockpiles of crude due later tonight to assess the global oil supply and demand levels, and the data will give traders a better picture of whether the global rebalancing is taking place in the oil market. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.